G'day everybody, Cristian here from ELDAD Property Group. Today we're at Rudd Mantell Accountants offices and we're going to be interviewing Adam Mantell.
Yeah, I'm Adam Mantell from Rudd Mantell Accountants. We're based in Brisbane in Queensland here. We work with small and medium businesses predominantly, assisting them with their tax, their accounting and their business advisory needs.
So we're going to be interviewing him and talking about business broking and all the ins and outs, for sellers and buyers and the like. So tune in for that. Due diligence can make or break a deal, but what exactly is due diligence and why is it important?
So due diligence I tend to equate very similar to a building and pest inspection when you're buying a house. So when you go and look at a house, you can see what it looks like on the outside, you can see how many bedrooms it's got, whether it's got a pool and all those sort of things. But what you don't know until you do the building and pest is whether there's termites or building problems and that sort of stuff. Basically, a due diligence is a building and pest for a business. So it's you going through with your accountant generally and probably a lawyer as well, looking through and understanding all of the underneath parts of the business and making sure you're getting what you are paying for. In a lot of ways, it's actually more important than a building and pest with a house, because sometimes you can see those things coming through in a house where it's very easy to miss those important underlying things with a business if you don't do your due diligence.
Due diligence period is a critical time for buyers and sellers alike, but what should be happening during this time?
Yep, so during your due diligence, again, you need to get an understanding of the business. So the sort of things we would recommend clients to do is, first of all, have a look at the point of sale system and compare the sales on the point of sale system to the sales in the accounting file, making sure they're reconciling up and that there's no missing parts or irregularities in that. Looking at the employment agreements, looking at who are the employees, who's important in the business, who maybe is generating the most income or bringing in the most sales leads, and looking at the employment contracts of those people to make sure that they're very tight so we can actually hang on to those people. You're looking at things like customer lists, supplier lists, making sure that you understand who are the customers, who are the suppliers, they actually exist. We tend to try and do some investigations on those customers and suppliers to check that everything makes sense from that perspective. And you also then do a much deeper dive into the accounting system, and you're looking at things like, what are the big expenses? Are they realistic? Are there expenses missing? Is this business trading in line with industry averages for this sort of business? And if it's not, what might be causing that? And so they're the sort of things you're looking through a due diligence.